A very good evening to you. Thanks for staying with us. It's still News 360, but time for business with me, Nanaikia Mensah Brampa. Well, the analysts predicted and the Bank of Ghana has nailed their predictions. Bank of Ghana has maintained its policy rate at 21%. Current decline in the country's inflation rate and the fall in the price of crude oil on the world market have played a major role in maintaining the monetary policy rate. Well, the last time the policy rate was increased was in November last year. Inflation figures peaked in the last quarter of 2014. This pushed the Bank of Ghana to increase the policy rate by 200 basis points to 21% to tame inflation. The central bank has once again decided to maintain this figure considering the growth outlook.
On the downside, however, the pass-through effects of the falling crude oil prices, declining inflation expectations, the ongoing fiscal consolidation and a possible program with the fund are expected to exert some downward pressure on inflation and drive inflation further down towards the target band. In view of the foregoing, the committee judged the risk to the inflation and growth outlook as balanced and therefore maintained the policy rate at 21%.
Inflation for the first month of this year, January, dropped to 16.4% and is expected to further decline. Dr. Henry Kofi Wampa remains confident inflation target of 8% is still achievable by 2016. Analysts and economists had said it would be prudent for the central bank to maintain the policy rate considering the fall in crude oil prices.
The world oil price has come down. So in terms of the impact that we expect these external factors to have on the domestic economy is very low. So for that reason, a further hike is not the way to go. Perhaps we have to signal to the market that we are prepared to cut the business community because already there are several challenges, especially when it comes to higher interest rate.
Policy rate is expected to further serve as a benchmark for the various banks in setting their base lending rates. Well, aside the policy rates, lots of issues and matters arising, talking about the IMF and the final issues also regarding the signing of the program. I'll be giving you more detail, but let's move to issues concerning exports and the national export strategy to transform the non-traditional export sector into a $5 billion earner in 5 years has been inaugurated. The Minister of Trade and Industry, Dr. Pio Gabra, inaugurated the steering committee here in Accra. The vision of the national export strategy is to position Ghana as a world-class exporter of competitive products and services. It is also to ensure that every district develops at least one significant and commercially viable non-traditional export product. The 14-member committee chaired by Dr. Pio Gabra is tasked to achieve a 35% increase in the share of non-traditional exports in total exports. The steering committee will help pursue full implementation of the objectives of the National Export Development Program by strengthening and resourcing export development institutions, manpower development and training, incentives, and reduce uncertainties and risks.
The European Union actually has funded a program called TRAC, TRAC-QE, which also has offered a lot of technical assistance, additional laboratory equipment for various kinds of testing to be done to make sure that Ghanaian exports have a higher probability of entering the European markets. Under the Economic Partnership Agreement between the European Union and African countries, including ECOWAS and Ghana, the European Union has promised or pledged about $6 billion worth of support to countries that sign up to that agreement.
The minister observed that the Ghana Export Promotion Authority, as the lead implementing agency, has to adapt its work plans and programs for this year to align with NEDP's work plan. The technical advisor for export trade development, Gerald Nyakomensa, said products like cocoa products, horticultural products, cashew nut, creative arts, fresh fish and processed fish have been identified for immediate support based on gestation period and the ability to generate high revenue.
And talking about fixing the economy, the International Monetary Fund is expected in the country tonight for the final discussions for a possible IMF bailout. But ahead of that, the governor of the Bank of Ghana, Dr. Henry Kofi Wampa, is confident an IMF program will, among other benefits, contribute to the stability of the Ghana cedi. Reacting to predictions that the cedi will likely hit 4 cedis and 80 pesos by the end of 2015, Dr. Wampa believes with the central bank's policy stance in place that local currency will remain stable.
The program itself, the support may not be as significant, but then what it brings with it is support from the donor partners as well as confidence from the institutional investors from the diaspora and so on. So we expect more confidence in the economy and therefore more forex flows and rather than outflows that will help stabilize the currency during the year.
Already, the technical assistant team of the International Monetary Fund, the IMF, is present to help with the technical aspect on monetary committee process. The IMF mission team working on Ghana's program are expected in town by Wednesday, 18th of February, to open the final round of talks before a program can be sealed. Some economists say discussions are likely to border on progress made in cleaning up public payroll and measures instituted to check rising public debt and government expenditure. An IMF program is expected to help fiscal consolidation and offer balance of payment support to boost investor confidence in the country.
Well, so what more is expected on the table? Well, when the negotiating team comes in, we'll tell you more. That will do for tonight.